All right, folks, welcome back to Macro Crazy. Apologize, I'm late. Usually I upload Saturday mornings, but it's been kind of a busy day, and you're going to get it right before New Year's Eve. For those of you who've already crossed the threshold into 2023, Happy New Year. Okay, so as you can see, what we're going to cover today is a Zero Hedge article from about Morgan Stanley's 2023 surprises to look for. Morgan Stanley has research in all kinds of areas: equities, fixed income, uh, overall, economic view, and various other areas. And sometimes they align, and other times they don't. And while there's some overlap here, I wanted to cover it basically because there's some contradictory comments, and you should be aware of both so you can plan for your very profitable 2023. I should add that this particular piece of research is from an interest rate strategist at Morgan Stanley, so it will obviously be interest rate focused. So just keep that in mind. Number one is going to be the COVID surge, which is happening as China reopens, is raising fears of deflation because it could result in another shutdown or very, poor resumption of growth in China. So demand from China could be much less than expected. So deflation fears, not unique to Morgan Stanley. It's been mentioned in various places. In fact, deflation is already happening, or disinflation is already happening in certain areas like, automobiles, especially in used car prices. Housing is probably the next domino to fall. But it's out there. So if deflation rather than sticky inflation becomes a theme of 2023, that could be real bad news. Okay, number two, the Fed doesn't cut interest rates even as growth contracts in 2023 and possibly leads us into recession. Okay, the other Morgan Stanley piece video I had done, they literally said that they were projecting no cuts in 2023 and then some cuts in 2024. So I'm not sure why this is a surprise. Maybe all the Morgan Stanley teams need to get together and have a little convo before they put these pieces out. But anyway, that's their second surprise for 2023. Number three, Morgan Stanley's surprise is quantitative tightening is going to be paused by the Federal Reserve, basically because it's causing dysfunction in the Treasury market. Number four, ECB, that's the European Central Bank, they're saying is going to cut interest rates in the second half of 2023 on falling house prices. So if you're a homeowner in Europe, ouch, bad news, it looks like, according to Morgan Stanley, because housing prices would have to fall pretty sharply in order for the ECB to want to save them by cutting rates. Okay, the next one is number five, Morgan Stanley's surprise. They're saying gilts, that's British government bonds, are going to underperform in 2023 due to supply. So basically, a lot more gilts or government bonds are going to be issued to fund all the spending they're doing. A similar problem to what we're having over here. And therefore, that supply is going to weigh on, all government bonds. Number six surprise is actually kind of funny. They're saying the BOJ is going to do absolutely nothing in 2023. So I guess they're calling that a surprise given the environment, but take from it what you will. Number seven, I'm going to have to press D for doubt. They're saying there's a bull case to be made for the British pound, GBP, to rally in 2023. I don't know. I think the UK seems the most vulnerable economically along with the EU. And tough to see given, if there's a strong decrease in energy prices and the housing market doesn't completely collapse over there, perhaps. But I'm definitely, at best, I'm a wait and see. I'm not on the bull case for GBP, but Morgan Stanley says different. So do your own research on that. I'm going to have to press D for doubt again on number eight. Morgan Stanley is surprised. They're saying there won't be a housing crash in Canada because of the recent surge in immigration. And also, there won't be any upward bias to the US dollar Canada currency pair. Pressing doubt on that. Recent immigrants, I doubt. I think the average cost in Toronto is around a million Canadian. So, and someone correct me if I'm wrong, but anyway, I doubt recent immigrants have saved that up. So that seems insane to me. But maybe Morgan Stanley knows something. I don't know. So we'll have to see about that one. Number 9, Morgan Stanley surprise for 2023. Shouldn't really be a surprise. They're saying the Fed is going to review its 2% inflation target. The Fed has no option. They can either collapse the economy by keep hiking rates, or they can just ease back and call it good and just accept a higher level of inflation, which will have the government pay back its massive debt. So I think this was already baked in the cake. Shouldn't be a surprise, but here it is. The last one is really just technical jargon, but basically they're saying in Europe and the UK, fixed income break-evens are heading to record highs. Measure of liquidity, from what I remember, someone correct me if I'm wrong. So another sign that the market could be breaking down there. So that is the 10 for Morgan Stanley surprises for 2023. I hope you found that interesting. I'll have more tomorrow from somebody else. And let me know your comments, your thoughts, what you like, don't like. And I'm happy to customize as appropriate to make this more valuable for all you macro traders out there. Anyway, have a very good and happy and safe New Year's. And we'll see you on the other side in 2023.